Morning all, how are we all doing? Happy Monday. Morning Yotko, Senji, Evil, Monkey, Paul, Steve, Gregors, Rodrigo, Danny, JC, Kennelly, Danny, Daryl, Vitali, Virginia, Mark, Ismet. How are we doing? God, there's a lot of people here this morning. That's good. So, new week. Nothing much happened over the weekend. Excuse me, apart from the French elections, which went completely the opposite way to what they thought was going to happen. But anyway, yeah, I was just looking at the euro this morning before I came on. Not really a lot of impact to that at all. We had a little drop, but they filled the gap straight away. So there's nothing really of any interest on the euro off the back of those elections. I thought there might be a gap, but thought it might be a little bit bigger than that, but obviously not. So there's a gap down on euro Swiss, which hasn't been filled. Euro pound, pretty much there. Euro yen, not far off. So there's nothing impacted basically off of those elections. So we'll have a look through what's coming up this week in a minute. But I'll start off with the weekend news. So this came out on Friday afternoon. Not quite sure where they get this from. Fed swaps resume fully pricing in 2 rate cuts by the end of the year. We were talking last week before, FOMC, about no rate cuts this year. 2025 being the next rate cut or the first rate cut for the US. Suddenly, Friday, they decided, actually, no, we're going to have 2, which does come out of absolutely nowhere. There's no fundamentals behind it at all. So I don't know what that is. But I find that very hard to believe. So we kind of ignore that. But yeah, I don't know where that's come from. But apart from that, over the weekend, it's all been dominated by the French elections, as you can see. Le Pen was expected to come in and take control. Hasn't happened. So rioting, chaos in France. It's leaderless at the moment. There's no party with a majority. No one wants to form a coalition. All seems a bit of a mess at the moment. So we'll see what happens over the coming few days on that one. But just be prepared for a little bit of potential volatility in the euro. The euro falls after French exit polls, down 0.2% on the weekend forecast, but it didn't actually happen. So I don't think really there'll be a lot of difference with the euro. Don't forget, France is just one part of the euro. Germany and everybody else in the euro obviously is not affected by this. So although France makes up a big chunk of it, but we just need to be aware, obviously, there may be something happening which could suddenly tank or pump the US, in fact. I achieved a goal yesterday, apparently. Good, eh? Oh, yeah, look. Big injury, everybody. Don't know if you can see that on my arm. Big injury. We had an off on the mountain bikes yesterday. Coming down a nice hill at speed. And it was raining and wet yesterday. And all of a sudden we hit a massive, long stretch of chalk, which, of course, turned into an ice rink. So my son came off in front of me. I came off after him, and then my other son came off behind me, literally within 5 seconds of each other, all in the same spot. It's very amusing. Wasn't amusing at the time, but yeah. So yeah, massive wipeout yesterday. It was quite fun. Anyway, nothing from the Bank of Japan. Over the weekend, I've read through all the news this morning. There's nothing in there about intervention or anything. So that's pretty much it for the weekend. So nothing exciting. This week is also, yes, everyone's okay, by the way. It's weird. Everybody's got the same injury in the same place. My other son's got both of his knees cut up a bit. But yeah, hurt prides more than anything. So this week is also a very weird news week. As you can see, it doesn't even take up half the page. There's no news today, absolutely nothing. So today might be a little bit of a quiet one. Tomorrow we've got Powell testifying. So Powell testifies tomorrow and on Wednesday. So this is basically Powell laying out forward guidance to the government, basically to tell them what is going on. There's a good possibility after that news we just had yesterday, or on Friday rather, about 2 potential rate cuts. There is a possibility, I think, that we might find him saying something tomorrow that actually moves the market and talks about interest rate cuts a little bit more prominently in regards to a drop. So we'll have to keep an eye on that tomorrow afternoon. That's half an hour after the market opens, so we might have a fairly quiet open on the US tomorrow. We've also then got him talking again on Wednesday, second part. Wednesday's the main news this week. There's 2 main newses this week. The first one is Wednesday morning, which is the New Zealand dollar interest rates. They are forecast to remain the same. However, the New Zealanders have pointed to the fact that their inflation figure is certainly not where they want it to be. It's not coming down fast enough for their liking. So we are sitting at 4. It is coming down fairly quick, but there is usually when you get a move of that speed, as the Aussies have had, you tend to get a bounce back. Yeah, so it drops fast, bounces, comes down like that. So there is a possibility of another rate increase. I don't think they will, but we have to be aware of that. If that happens, obviously New Zealand dollar is going to go through this roof. Aussie probably as well. So be aware of that. If you've got any Aussie positions and New Zealand positions on, worth taking profit on everything before Wednesday. And then we've got GDP for the pound. Unlikely that's going to have a massive impact, but we might see some movement on the pound. But the main news is going to be the CPI number. So we've got CPI and unemployment on Thursday for the US. So depending on what Powell says tomorrow and Wednesday, we then have CPI for Thursday. So that's the big one. So if Powell hints at a potential rate decrease this year and the inflation figure drops, i.e. that comes down lower than forecast on Thursday, that could really kickstart a move on the US dropping. So again, we're always watching these figures here, waiting for these to be much bigger than anticipated so that the US can do something about it. If that doesn't happen, we've got the producer price index on Friday. And again, negative number on that will head in the same direction. So there's a possibility if Powell sets up we might be doing some interest rate drops now this year because things are starting to look a little bit more rosy. And then we get drop, there's a good chance we get a big move on the US this week. So again, all figures related. So we'll have to wait and see what the news says. So that's this week's news. So it is literally, apart from that New Zealand dollar interest rate decision, sort of the pound, it is US dollar all the way this week. So it's all about the US this week. So quite possibly we'll just do that the entire week. Certainly today. There's no news today. So as you can see, the market's pretty flat this morning. Any ADR hits you get on the euro, be wary because they're probably not ADRs because we've got a gap down situation. So they're probably just pushing back to fill gaps. So we'll see on those. But we have had one with the Swiss yen. That's screamed up. God, look at this. This is the yen. So again, weakness on the yen this morning. And we've got a load of money coming into the Swiss franc by the looks of things. Yeah, a bit of a rally into the Swiss franc. Again, safe haven currency. Stuff's going weird in Europe with France. So money going into the Swissy, going into the safe havens. So, but a bit of a movement on the yens as well. Lovely market structure on this US dollar yen. Coming down beautifully at the moment. Hopefully that continues. I just want to get out. Mountain bikes are dangerous. My son came off and broke his collarbone. Yes, I know. But it's fun. Najorj, morning, Amy. Looking at the ADR values lately, it's depressing. We are close to the 50-point range for most pairs. I know. Well, I said about this last week, I think it was, or the week before. Pound yen is the only pair over 100 ADR. It's unbelievable how tight. Actually, pound odd is also 100 now. But everything else is just dead. It's just the most weird market I've ever experienced. This whole year has been weird. It's been contracted, squeezy. Just the market either seems to be doing one or two things. There is no in between at the moment. We're doing that. We're not going anywhere, and we're really tight ranged, or we're going parabolic for no reason whatsoever. There doesn't seem to be any in between at the moment. There's this. It's all gone. It's almost as if there's no liquidity in the market, and it has no chance to do anything, or when it has to do something, there's no liquidity, so it goes further than normal because it needs to reach to get the orders. It's just weird. It's a very bizarre market. We're coming into summer trading as well. So July, middle to end of July, the markets tends to slow down. So we'll see what happens. August is typically a very slow month. So if these ADRs contract anymore, basically we'll be flatlined, which is fine. So just take the month of August off. But yeah, very, very weird market at the moment. You can see that we're second week in, or just coming into the second week. I wouldn't expect us to have any monthly ranges hit, but nothing's got anywhere near half of its monthly range. It's just not moving. Got one, you got the Euro Swiss there, which has done a decent-ish move, but that's just nothing happening. It's all news driven. This year, we've been waiting for interest rate news. We haven't had any. The only people that have moved their interest rates have been the Swiss and the Europeans, and obviously now the Canadians as well, but by 0.25%. So we've been waiting for over 12 months for someone to say, yes, we're going to drop interest rates. It finally happens, and the market goes, well, it's not much. It's just not done anything. That's it. We're just contracted waiting for interest rate news, and we're not getting enough of it, which is why I was interested as to what that news was on Friday. Where did you get the idea that we're dropping interest rates twice this year on the US dollar? Not what they said. Somebody's just come out, and the swaps seem to be saying that that's going to happen. I don't think it is. Well, Fed certainly. Powell doesn't say that, but you know, things change. Tomorrow he testifies, so we may well get a little bit more indication. So it could be a very volatile week this week. We'll wait and see. So this morning I'm just going to go through all the pairs. RSIs, there's a few to look at. We've got the CAD Swiss, the pound CAD, and the US dollar Swiss. So it's Swiss and CAD related at the moment. There's a few 4 hours to look at as well, but we might as well just go through all the pairs, look at everything, see where everything is, see what the biases are, and then obviously we can look at the RSIs while we're going. But yeah, it's been very, very, very quiet on the hourly RSIs, very quiet recently. So I've still got a fair decent amount of exposure on, but I'm a little bit overexposed actually. I might just shut this US CAD off actually, because two positions on that as well. Just want to reduce my exposure on the US a little bit. Got a little bit too much on there. So yeah, up 3% this month. Would have been up 6% this month had it not been for me taking a trade in the yen. So my aim with the yen is to get 3% back, because that's what it's cost me by getting into the thing again. So yeah, I don't like the way it's come off of this support either. Look, so I'm really hoping this downward channel just continues and they just unwind this. But this is a flag, looking like it might be a flag break, especially after what's going on with the yen this morning. So we'll see. We'll see what happens. But interesting time. I rode, sorry, hang on, let's go back. I see a res arrow on Euro US dollar 1 hour chart. A res arrow? What's that? A retest arrow, yeah. I don't know what settings you're using, but on mine, that was the candle that broke the low of the box. So that is your retest of the M pattern. But your brokers are good. This is, don't forget, this indicator, all indicators, every indicator on your chart is data driven. If your broker's data is different to my data, your indicators will show different values to mine. This is why this is one of the reasons no one ever gets the same results. I was told from a very, very early age in trading, do not trade my charts, trade yours. And every time I would say to or mainly my mentor that kind of turned everything around for me, I said to him, so why is your line there? I can't seem to get my line there. So don't trade my charts, trade your charts, because your charts are what you're trading. Yeah. If you trade my charts and then I don't show you my charts again, how can you possibly continue with that trade? So if you don't have that and you're trading retests, you're not in. Simple as that. Because your data is not the same as my data, unless you're using my broker, in which case you will have exactly the same. But obviously, it's just data. Yeah. So if you've got a gap down, you haven't got a reverse alert there, and that low of that candle is above that line there, you won't have that arrow. That's it. You need to wait for your data to show. But this is indicators. A signal, this is why I say it, the signal to get into the market is less important than how you manage the trade. Because if I had gone short there and you haven't, and you go short on a candle that triggers here, we're both short. Whether you're there or there has got nothing to do with making money. Whether the market goes up or down after you've got into it is how you make money. And how you manage the trade if it goes against you is how you make money. Whether you get in there or there because you got an arrow there or there doesn't make the blindest bit of difference to making money in Forex or in anything. It's nothing to do with it. It's just a signal. I rode, just leant on my injury. I keep leaning on it. It's really annoying. I rode the back of New York City subway trains. Kids are tough. Yes. You rode on the back of New York City subway trains? Health and safety. Morning, Neo. Can't wait for summer trading then. Yeah, it's going to be fun. It's almost as if, you'll need to take a quarter of an ADR profit. That's all you're going to get. Now monthly ranges is almost what daily ranges were in the recent years. Yeah, like I was saying, I keep bringing up the pound New Zealand example because that's the one that always stuck in my head because it was the one I used to trade all the time. It used to be 450 ADR, daily range, 450 on average. The daily range of the pound New Zealand, or rather the monthly range of the pound New Zealand, is now 612. It's almost, the monthly range is almost what it used to do every day. Just mental. It's just so different conditions. And again, I keep bringing this up. Backtesting, no use whatsoever if you're not using anything but ADR. If you use pips in your trading, in your system, your strategy, your backtesting, utter waste of time, because the number of pips the market moved 3 years ago and the number of the pips the market's moving now are nothing to do with each other. The average daily range, though, is always a percentage of movement. Always going to work. NT Trader, live pound on Maya channel X2. No idea what that means. Morning, Abdi. That Osaka dude says there's both positive and negative impacts of the weak yen. Yeah, there is. He's right. But still in decent drawdown on Aussie New Zealand and news coming out. Well, that's not a bad thing. The news could go your way. So the New Zealand dollar is this news that we've got coming up this week. So if you look at the New Zealand dollar interest rates, over the last 3 rate release, or it's been frozen for 12 months basically, but the forecast has been 5.5 every time. We've had a 5.5 every time. Yeah. But go and look at the New Zealand dollar. Yeah. So that was the interest rate not changing. Parabolic. That was the interest rate not changing. Parabolic. Yeah. This thing at the moment, the Aussie and the New Zealand at the moment are just going mad regardless of what happens. It doesn't seem to matter what happens. But look at where we are in the range at the moment. Yeah. And look at where we head. So we're high at the range. This news is more likely to drive the New Zealand dollar up, i.e. Aussie New Zealand down, than it is the opposite. And if it does try to go that way on an as expected news release, you've got bank and institutional limit orders at these levels, which it's going to find it very hard to get through. Very hard to get through. Yeah. So look at this propulsion gap off of that double, triple top there. We hit it, immediately sold. We hit it, immediately sold. Yeah. The banks and institutions are selling this zone. There's no reason for them not to sell this zone because nothing's changing with interest rates. These are both commodity pairs and trade partners. There's no reason for this currency to fly off in one direction or the other. So the more likely outcome of the news is bullish New Zealand dollar, negative Aussie New Zealand. But you never tell. So we'll wait and see. Past evaluation, now waiting for review. Good man. Well done. Morning, James. How can you combine position trader EA with MRA EA in one chart? You can't. You can only use one EA on one chart. At least its swaps aren't like the US dollar yen. Yeah. Yeah, Aussie New Zealand. I'm not trading Aussie New Zealand at the moment. I've become very skeptical of this pair, right? So the last big squeeze I had was there, which did exactly what I expected it to do, but 2 weeks too late. I've looked back at my P&Ls on the Aussie New Zealand over the years, and I've been profitable on it, but not very. All the back testing I've done over the last, I've been back testing like crazy on RSI2 and other strategies over the last month, a lot more than normal. And when I've been doing all the portfolio analysis, this thing is always underperforming, which is interesting. So it's kind of flagging to me that Aussie New Zealand is not a good pair to trade with mean reversion position trading. It is still a very, very rangy thing, as you can see. But yeah, I mean, this is going back to 2017. We range. That's all we do. But look at the speed of the ranges, yeah? The acceleration of the moves is much more parabolic than most instruments, yeah? Which means it's squeezy. Yeah, so it's not as good for position trading as all the other instruments because they move in more orderly patterns, more market structure driven. Whereas this is more parabolic. When it goes big style. So I'm coming to the conclusion that I just want to exclude this from the portfolio at the moment because there's plenty of other pairs to get exposure on the Australian dollar and the New Zealand dollar. You've got loads of other pairs you can trade New Zealand dollar, all the the euro, the pound cross, everything. So we don't need to be in Aussie New Zealand, and it's the most difficult one to trade. So I'm not in it at the moment. How has the SIH strategy been working? Yeah, good at the moment. It's been pretty volatile. There you go. Pound. I'm not in the FTSE this morning. DAX, another clean break. We've had loads and loads of clean breaks recently. Market's been very good at the open. It seems to have come back to life. I'm just going to close one of those and just bank some. So yeah, it seems to have come back to life. We're getting really good opens at the moment. I had a couple of hedges last week, but yeah, good. it's the trouble with the SIH strategy is stagnation. If you look at the test results with the ORB EA, which is basically the same strategy. So if you look at all the charts, basically on all these set files I put out for opening range breakout are all profitable. They're all long term. It's a good strategy. SIH gives very, very similar results. It's just it takes less trades, and obviously you hedge, so it locks in loss better. But if you look at all of these, there are large stagnation periods where it doesn't make much money. It's when the market is trending nicely is when it makes its money, and the market with indices trends most of the time. So you're always going to find stagnation. And this is the problem with it. And this is why people get fed up with strategies, because they don't wait for the strategy's edge to play out. They just sit through the stagnation and go, it don't work. But then as soon as they stop, they miss the profit period. Yeah, strategies don't go in a straight line. They go like that. Yeah, there's an edge. The edge plays out when the market conditions are right. When the market conditions are wrong, the edge doesn't work. Yeah, but you can't tell when the market conditions are going to be right because you haven't got a crystal ball. So you have to trade through everything. That's how trading works. You can't go, oh, I'm going to be a trend trader this month because the market's going to trend. You've no idea what the market's going to do. And SIH has gone through a stagnation period. Now it's in a upthrust. So the strategy is working very well. But that's the problem with trading. This is why you've got to stick to a strategy. Position trading has bad months, has also fantastic months. It's just the edge. Right. I will go through all the pairs. I'm so confused about your meaning of a squeeze. A squeeze is just the market moving strongly in one direction. That's a squeeze. Yeah. You've probably heard people talking about the term long squeeze and short squeeze. Yeah. So when I get in, so this is this squeeze. I've just been through this squeeze on the Aussie New Zealand. Look. Yeah. So I got in short. Yeah. Market pushed up, shorted, market pushed up, shorted, market pushed up, shorted. There is no downtick. Yeah. So market structure, how the market moves normally is it pushes, it profit takes, it pushes, it profit takes, it pushes, it profit takes. Market structure. What we normally have with on most moves. So a typical move up or down will be like this. Down, profit, down, profit, down, profit, down. Every single one of those is an exit opportunity. In a squeeze, you get a push, stagnate, push, stagnate, push, stagnate, grind, profit take. Yeah, too late. I can't get out on that. It's not big enough. Yeah, so that's what a squeeze is, where the market just pushes and either does a little flag break or goes into an accumulation before it does its next push. So each leg basically doesn't have a pullback, meaning that we can't get out. That's why they call it a short squeeze or a long squeeze. So anybody that's short is getting squeezed to the point where they can't hold it anymore. You exit because you can't hold it anymore. And then the market goes, okay, brilliant. Now we'll do the profit take. We've squeezed the shorts to the point where they have given up. Because the shorts have given up, there is nobody left when we want to buy that is going to sell to us. So the only option we have is to unwind our long position. That's a short squeeze. That's what a squeeze is. That's why you hear the term market's being squeezed, because it's pushing in one direction further than normal. That's what it is. And squeezes don't work for position trading. We don't get years where we don't have squeezes, unfortunately. That's just what the market does. That's how the market works. If you knew something was going to squeeze, you wouldn't get into it. But again, there is no crystal ball. Not even John Wick's time machine knows when there is going to be a squeeze. It will go up, it will go down. When it will go up and down, that's the one thing. If we know it goes up and down, that's what it does. All it does. It's binary. It goes up and it goes down. It doesn't do anything else, and it moves through time. That bit there is the bit we need. When? Unfortunately, no one on the planet can tell you when. Doesn't matter how good your indicators are, how good your technical analysis is, the market does what the market does. And this is why we scale into positions in the way that we scale in, because I don't know when it's going anywhere and how far it will go. I don't know anything. Nobody on this planet right now knows where this is going from this day forward. Nobody. No bank, no institution, not one person on the planet knows where this is going right now. Yeah, because it doesn't matter how much your bank has got to go long on this thing. There are other banks that are going short on this thing at the same amount or more than you. So it doesn't matter if you're Barclays sitting on 200 billion to go long on the Aussie New Zealand. If HSBC and Citibank are going short 300 billion, you ain't going up. You don't talk to them in that way, and you will swap orders and do over-the-counter transactions, but no one can tell you in any institution where this is going. And this is what every single system, strategy, indicator, EA, and course on the planet is trying to teach you to predict the future. You can't. Load of bollocks. No one can do it. This is why everybody spends years in cycles going through system hopping, because they're looking for the holy grail of systems and strategies that can predict the future. But they don't realize that they need one to predict the future. They're thinking they know one exists. Doesn't exist. Just get in and get out. Michael, I have two charts. Oh, you're talking about the position trader EA and the MRA EA. Yeah, if you want to run them, they're totally different EAs. If you want to run both, open two charts. Yeah. In your chart, you have the position trader EA and reversal alerts. Yeah, that's an indicator, Michael. This is the market reversal alerts indicator, isn't it? Yeah, this is an indicator, not an EA. EAs trade, indicators paint. Obviously, indicators and EAs can do both, but so this is on my chart. I have the market reversal alerts indicator, but I am running the position trader EA, which has nothing to do with market reversal alerts. Also, I had a question about SRP gaps indicator. On my broker, Oanda, I will only see blue gaps. If I change bars back to show gaps to 500 at default 1500, it doesn't show any on the 1 hour chart. Yeah, that'll be data. So in your options on charts, you can change the max bars in history. But I mean, with the gap indicator, oops, I have mine set to 1500. If yours doesn't work on 1500, use 1000 or 500. But you know, look, the only reason I have it there is because I can. But on an hourly chart, I don't know how many candles that is from that propulsion. Let's look. So that is 1,000 candles. So I'm going back 1,500 candles, which is there. So that is the first propulsion. Oh, no, sorry. There. That's the first propulsion gap painted on my chart. You can't see it. It's a very small little grey one. But normally, you're not zoomed out this far. So you don't really have to go back that far. The older the propulsion gap, the less effective it is typically. This is going back to May on an hourly chart. So when I zoom out on my chart, I go back to March. So I get 3 months worth of data. But I mean, there's no right or wrong with it. Somebody was saying on Telegram or Discord, you know, they're having a problem with the MT5 version. It's not painting properly. I don't know what that is, but it's not. This is all indicators are data driven. If you have a problem with an indicator, it's not the indicator, it's your data. It's always the data at fault. Because all this does is calculations based on data points. All indicators work in exactly the same way. They get data, they find a period of data, they run an algorithm or a calculation, and they are told to draw something. if something doesn't work as expected, it's not the indicator's problem, because the indicator cannot change. Your data does. If your data isn't working properly, that's your broker's problem, not ours, not mine, because it's nothing to do with that. So if you can't go back 1,500 candles because it doesn't work, there's probably a data issue. Now, if you put it on the chart and it doesn't work with 1,500, if you go out to higher time frames, flick about and do this sort of stuff and come back in, eventually you'll find it probably will paint properly, because it will load in data. But the rate of data loading into your chart and the rate that your broker supply, they're all different. Again, so when I install a brand new terminal, sometimes when I put the support resistance propulsion indicator onto that terminal, it won't paint, because even though I can see the data on the chart, for some reason it's not plotted correctly, and I think it's because it hasn't downloaded the 1 minute chart. So one thing you can also try is to go down to the 1 minute chart and untick the zoom button and just whack the home key over and over and over again and see how far you can go back. See, I can only go back to 3rd of May 2004. If I've asked my indicator on the hourly chart to give me 1,500 candles worth of data, and it doesn't, and May the 3rd is all that my broker has downloaded, and I need to go back to February to paint, I can't. Yeah. And you won't know any of this until you try. So 3rd of May is the oldest 1 minute data I've got. It's got to be long enough for the indicator to paint the data. Same with RSI. People load up the RSI dashboard and go, why is it showing zeros? And the ADR dashboard, why is it all showing zeros? Well, have you got daily data? Flick to your daily chart and all of a sudden it goes ping, because you'd never looked at a daily chart. Your broker hadn't bothered to download a daily chart, so it didn't have 10 days worth of data. It's just the way they work. Brokers are lazy. They're not interested in supplying you with anything of any quality. They're interested in taking your money away from you. That's their job. I was thinking to predict FX, I would need brokers at gunpoint. Well, brokers don't know where it's going, do they? Weird that Oanda won't have that data. It should be. It should have it. It's whether or not your terminal is set up with it. This is the thing. It's a dodgy thing, data. Always has been. And different closes as well. Some brokers close their candles on the 4-hour time frame on the New York close, and some are on European close. That's 2 hours apart. 2 hours difference. So you get 4-hour candles. I look at, and I used to have this with one of my mentors all the time. His candlesticks would look totally different to me on the 4-hour time frame. And I'd be like, how you get those candlesticks? Mine look totally different. It's like, well, I'm on New York close, you're not. It's like 2 different brokers showing exactly the same price points in data, but completely different candlesticks. If you're trading candlestick patterns, you're screwed, because I show a candle like that, you show a candle like that. Same thing. It's just that one has got a massive bullish engulfing and one's got hasn't got a bullish engulfing. This is why candlestick patterns and stuff like this just doesn't work. Elliott wave requires a movement in price of a set distance over a set period of time and that sort of stuff. 2 different brokers will show you 2 different Elliott wave patterns. If you're trading Elliott wave and somebody else next to you is doing the same thing, you're both going to get completely different results. Signals. Signals are generated by data. Data's different, signals are different. Nothing you can do about it. Anyway, we're waffling. Out of curiosity, do you have your RSI set as close of candles or median? Median. Personally. Only reason, I mean, again, there's no difference. Well, there is a difference, but whether or not it's right or wrong to have median or close is trade by trade. So I'm just set to median because I started using the RSI indicator off the back of the TDI indicator, and the TDI indicator uses the median RSI. Only reason I use it, purely because of some other guy's indicator. There's no right or wrong with it. It's just what I use. You've got to use one. This is the thing. I was always told years and years and years ago, if your indicator has multiple inputs, it's rubbish. The more inputs you have in an indicator, the more difficult it is to make that indicator work for you, because there's too many variables that you can change to curve fit it to fit the chart in history perfectly. What happened in history is never happening again. So all you're doing is you're curve fitting. So this is the only real changeable element in the RSI. You can choose any of these. They will all slightly smooth out and give you ever so slightly different signals on it. But at the end of the day, they don't make a massive difference. Look, there's still a peak there. There was a relative strength move there. You can see it on the chart. You change it, that peak, from to an open. There's still a peak there. Yeah, you change it to a weighted close. There's still a whacking great peak there. You change it to a median. There's still a whacking great peak there. Doesn't really matter, does it? Yeah. What we're using this indicator for is to tell me over the last 21 candles, has there been a big strong move? Yes, because I want to get on the mean reversion of it. That's all I'm looking for. Just show me roughly, has it gone? And signal to me. If I'm trading, I don't need to look at this indicator. Yeah. If something's gone like that, I know it's extended because I can see it on the chart. It's been going up for 3 days. It's extended. I just need this for EAs to trigger a condition and dashboards to trigger an alert. If I was trading completely naked charts, I can tell you when the RSI is extended because I can see the thing on the chart. I can tell you that's going to cause an RSI extension. I can tell you that's going to cause an RSI extension. Didn't even look at it, but it has caused an RSI extension. Yeah, because it's moved. That's all we're looking for. We're looking for indicators that tell us conditions based on the edge of whatever we're doing. After coming in here more regularly, I'm able to read structure a lot faster using fewer indicators. Yeah. Best way to trade is using no indicators. How a lot of the turtles and all the gurus in the past, like Larry Connors and people like that, they didn't use many indicators. One, maybe, if that. Mainly price action. That's what is key. Yeah, somebody sent me a signal, a strategy the other day, wanting my opinion on it, basically, and I couldn't even read the candlesticks. There's a lot of movement going on. We'll look at that in a sec. There was so many indicators on the chart. He had 3 oscillators. He had a channel indicator. So there's 3 oscillators down here. There was some kind of channel indicator which repainted every time a candlestick. So it would be an upward channel, then a candlestick would paint and it would close, and all of a sudden the channel would go down. There were 2 moving averages, and there was an arrow indicator, which I've no idea what it did. But anyway, so for one signal to happen, you needed 3 oscillators, yeah, a channel direction, 2 moving averages, and an arrow. Yeah, so there's 3, 4, 5, 6, 7 things need to line up for you to press the button to give you a 50-50 shot of making money. Yeah, and he back tested this, and he said every time these 7 line up perfectly, it makes money. Yeah, the reason for that is because every single indicator on the chart had been curve fit to meet the conditions of the other indicators. Forget the fact that he had 3 condition indicators, 3 trend indicators, and 1 signal. Yeah, you don't need 3 condition indicators and 3 trend indicators to tell you what's going on in the market. You need 1 condition indicator and 1 signal. That's it. So yeah, but these sorts of strategies are what people sell because they're different. They're different to everything else. You've never seen anything that needed 7. This is why it works, because there's 7 confluences. None of it works. The odds are 50-50. You press the button, it either goes up or down. Flip a coin. Exactly the same. Right. Let's look at stuff. We're waffling. Everyone's talking too much this morning. Right. Let me just quickly look at those those ADR hits. So Swiss yen, we've already had. So that's pushing beyond ADR. Euro yen pushing beyond ADR. So there's a weakness in the yen this morning. Euro pound. Right. So as I said about these euro ones, be careful with these euro ones. Obviously, we're in a gap down situation. So this push up here is just a return to origin gap fill. So they're not, this isn't an ADR move. It's not a strong euro this morning. It's filling the gap, basically. So they're completing unfinished business from Friday. So I would ignore any euro ones you get today because they're likely going to rally the euro to get the orders filled. So don't worry too much about those this morning. Right, so Aussies. In fact, I'm going to start off with the yens again, as usual, because the yens are screwed at the moment still. So there's nothing come out of the Bank of Japan about intervention. We've surpassed all the levels on most instruments from the last intervention. I'm still not trading it. I'm in a US dollar yen position. I wish I wasn't. I stupidly took another one. It's just got nothing. We've no idea what the Bank of Japan can or will do to prop up their currency. It's in a death spiral. They're stuffed. So something's got to give. The only thing that's going to save the yen at the moment is a weak US dollar. So this week, obviously, we've got Powell talking, testifying. We've got the CPI numbers and the PPI numbers for the US. So there could be a nice alignment of negative news this week from the US dollar. So all the yens still crazy moves. We have had a couple of days worth of strength coming in over last week. Swiss yen's flying again this morning. Euro yen still sitting up there. So you can see that the weakness in the US dollar yen was caused by real US dollar weakness rather than yen strength, because all we've had is a contraction on most of the other yen pairs. So it has stopped weakening dramatically, but it's still got no strength. So again, all of these are weak, but this is the one that they are interested in because this is the one that they use to make money because they're export business to the US. So it's kind of looking like it might form some kind of range here, but obviously this could continue to unravel and they profit take. That is the level of the previous intervention, and it's pretty much where my average is, and that is the level that they have used as support up until now. Yeah. So that's the previous intervention level. Yeah, and you can see every time we dip to this level, we're buying it back up again. So if we crack that this week, I think there's a good chance we'll start to unravel and we may see some strength coming into the end because the rest of the pairs will start to take profit. So if it doesn't, I don't know where it's going. It's just going parabolic, isn't it? So the yen's basically, I would just steer clear of at the minute because fundamentals for the yen are really, really, really unstable. They do not know how they're getting out of what they're in. Every time they've tried interventions, they've failed. They've reduced their bond purchasing overseas, which means they've got less power for intervention. They've put their interest rates up 0.1%, made no difference whatsoever. They need to put it up like 3%, then it will make a difference. But the interest rate differential is too vast. It's too much of a chasm. There's absolutely no way you are putting your money in the yen when you can get 5.5 in the US. Yeah. They've got to do something somehow. And I don't know what it is. So steer clear. I'm just hoping that we get a continuation in market structure and some negative US news this week. It's really my only out on that. I'm not close to, well, say that is not a break even for me because of swaps. My swaps are way too high on this. So I need a decent move down to kind of here, really, just to get a break even on it. That's my average price, but my break even level because of swaps is somewhere down here. So I'll be out if I can get that. So there's all your yens. They're all still stuffed. The Aussie dollar. So at the moment, the market is kind of neutral to bullish on the Aussie. Australia have said that there is a chance that they may have another interest rate change. Inflation is at 3.6, coming down 0.5%. Their interest rates are 4.35. So they have got wiggle room to go up one if this bounces. So I think what we're going to need to see is interest rates either pause or bounce, and then there's a good chance that that will happen. Exactly the same as in New Zealand. We're sitting at 4%. We're coming down fast. We're likely to bounce. There is a possibility of an interest rate rise this week, but I think it's unlikely. We've said that before, and they've done it. So if you look at the New Zealand dollar as well, while I'm talking about it with the Aussie, because they're related, they have given us these little shocks in the past. So we were forecast a 5 and we got a 5.25 there. We were forecast a 1.25. They gave us a 1.5. So every now and again, they will just do it. So if that happens, New Zealand dollar rallies, you tend to get a little bit of strength coming through in the Aussie as well. So at the moment, bias on this really should be bullish, but it is very up and down, up and down, up and down. There's no massive strength in the Australian dollar, so really you can trade it in either direction. So at the moment, there's a short signal on it there from Friday. So a mean reversion back into that propulsion gap. It is a breakout, but it was based on news, so we'll see. But yeah, it's a short signal on that one at the moment. Aussie dollar Swiss, again, all the Swiss pairs I'm steering clear of at the moment because of what they're doing with interest rates. So they have changed their interest rate without telling anybody, which they've done many, many times in the past. As you can see, that's what happens to the market when we get an unexpected interest rate decision. It is weak, and it should really remain weak. Aussie is a bull, Swiss is a bear. You shouldn't be doing anything but really buying this one. Trouble is trying to get in. Obviously, that was the last signal you had long. You had one there as well. You had one there. Yeah, it's just a case of you want to get in somehow, and it's trying to get in on a pullback. So any ADR hits to the downside. So if we drop down beyond average daily range, there's a good opportunity to jump in long. If we come back down to any previous propulsion gaps that have been retested, longs, any RSI extensions to the downside, longs. So much rather be longing than shorting Aussie pairs at the moment, especially Swiss against the Swiss. Aussie yen we've covered. Aussie New Zealand, again, this one really been driven by the New Zealand dollar. The New Zealand dollar is either turned on the heat or completely turned it off every time it's had an interest rate decision, and that's given the Aussie the advantage. As I said previously when we're looking at this one, it's a totally range-bound pair. It only goes up and down in ranges. So at the moment, that is our current range restriction. Yeah, we're at the highs, so we should really be coming down unless something changes with these. If the New Zealanders decide not to change their interest rates and the Aussies come out and change their interest rates, obviously we're going to come and test the highs. Yeah. So it's all about the news at the moment. Obviously it always is. But New Zealand dollar, though, however, this time round, there's a good chance I think we'll be dropping on the news. We're up at range highs. So at the moment, if we're going to conform to what we've been conforming to for the last almost decade, sure. Aussie US, again, I've got shorts on this at the moment. It is right now a kind of a long, but the US dollar, I think we're going to find out something this week, I think, on what's happening with interest rates. If Powell comes out tomorrow and says nothing new and the CPI number bounces on that US dollar, the US dollar is going to rally like crazy. And obviously there's a good chance this will just completely collapse. Yeah, doesn't matter how good and how strong a currency is. If the US dollar powers up, you're going against it. Yeah, it's going to go the opposite direction. So at the moment, I've got shorts on it. this is very, very, very range bound. All US pairs are very range bound at the moment, as you can see. So although we've broken out of the highs, I will be looking for it to come back down and retest them, basically. So I'm happy to scale into shorts on this one. Excuse me, but the overall bias is along. Take it in either direction, though. So that's the entry back there. CAD Swiss, again, same with the CAD Swiss against all other Swiss pairs. The Swiss is completely erratic based on interest rate changes which were unexpected. Every time they do this, it sends the market into crazy mode. So at the minute, you've got a bias on this one with the Canadian dollar reducing interest rates, the Swiss reducing interest rates, neutrality. So range bound. But obviously with the Swiss franc being a safe haven and being unpredictable with its interest rate changes, it's just had a negative CPI number as well, again, which means more chance of reducing interest rates. In theory, that should happen. It's just very, very difficult to trade. And again, talking about squeezes earlier, unexpected interest rate changes cause squeezes. So there's a good chance this is just going to flag and pump. But we've got a weak Canadian dollar, and if the US dollar gets negative news this week, that's going to weaken further as well. So this one could go absolutely anywhere. So again, from a mean reversion perspective and a position trading perspective, anything to do with Swiss franc, really unreliable. So, this is what you get with safe haven runs and unexpected interest rates. Parabolic, totally parabolic. So there's the interest rate change, the first one that we weren't expecting. Yeah, absolute monster move. They did undo that one because the market was in shock mode. Right now, what do we do with it? Weaken the Swiss franc. They have. So really, longer term, medium to long term, I think there's no reason why we shouldn't be pushing up to the highs. So if I had to have a gun to my head and say which way is it, I'd be more interested in longing it. But right now, I'm really not interested in doing anything with it because it's too erratic. Swissy, again, all my back testing, I know the Swiss is an erratic beast, always has been since they removed the peg. But at the moment, it's a little bit too erratic for me because we have no way of forecasting what they're doing with interest rates, and interest rates will drive long-term movement. So every 3 to 4 weeks, there'll be a change in direction based on interest rates. At the moment, we have no idea what that's going to be. So you're literally flipping a coin, which is fine, but you're flipping a coin on something that moves very parabolic. So not really that interested in that one. Yens we've covered. Euros. So at the moment, euros are dropping interest rates. We've had an interest rate drop on the euro, which is good. So fundamentals 4.25. We've dropped by 0.25%. We will be dropping possibly another 2 times this year. So we could go sub 4% this year, maybe 1. We're not sure. It all depends on what happens with this interest rate. 2.5. It's still dropping nicely. Not quite at target, but getting there. So Lagarde's current monetary policy statement says that we've dropped the interest rates. We're not going to drop it this month. We may drop it in August, but we may wait and see and drop it in September. So if we do that, we're then going to have a look at October, possibly November, maybe get a December. So there is a good chance of getting 2 further rate drops. If CPI comes out dramatically lower than forecast, they'll probably bring that forward and we'll definitely get 2. So either way, the euro is long-term bearish now, especially with what's going on in France. So you want to be selling it and looking for RSI extensions to the upside, ADR hits to the upside for shorts. And yeah, it should carry on like that as long as nothing changes in France. We don't have some kind of civil war breakout or anything stupid like that. In which case, then the Swiss franc's going to go through the roof and you want to be buying the Swiss. You know what I mean? Erratic. So at the moment, though, it's not going very far at all because it is bearish, but we're not changing interest rates on a monthly basis. So it's a case of in between those interest rate drops, what will happen is a couple of weeks before the interest rate decision, we'll probably see it go slightly bearish, and then it can do what the hell it likes for 4 to 6 weeks or 3 or 4 weeks and just go up and down as normal. So at the moment, I've got my EAs set short only because I don't want to be getting into longs on it. But the longs will work. Yeah, you had a lovely long there. No problem. You had a lovely long there. Would have taken 2 entries, but they'll still work. And it should come down very nicely. However, I'm just erring on the side of caution at the moment because things can change, and obviously interest rates can change unexpectedly. And if that happens, there is only really one way it's going to go down. They're not going to increase interest rates, put it that way. So therefore, the only thing you should be doing is obviously going short on it. So all the euro pairs are shorts, especially if you've got something like the Australian dollar, which could increase its interest rates, in which case that's coming down faster. Euro CAD, we've dropped interest rates and we've dropped interest rates. So this is a bear against a bear. More likely going to be doing that. It'll be pushed around by the US dollar as well, the Canadian. So you can trade this in either direction, but I'm short only at the moment. So I've got one short on it from last week. From there. That one I took off. Yeah, so I had a short on there from there. 2 positions and out. I'm in short from Friday. So, just waiting for some bearish moves to come in on that one. There's no news on the euro this week, but we have obviously got news on the CAD. If the CAD weakens with the US dollar this week, obviously this is going to push up. So got not a great propulsion gap there. It's kind of an accumulation, not very much. So that's not a particularly great propulsion gap. We probably will find sellers in there, but we could be pushing back up into this area here, 225, which means might need to get 3-4 positions on it. But no problem shorts on that one. Same with the Euro Swiss. No idea. Do what you like with it. I'm not really interested in trading the Swissy at the moment because of this type of movement. It's kind of that, but you're short on the Swissy as well. So, in theory, when you get a pair like this, unexpected interest rate drop weakens the currency. Forecast interest rate drop weakens the currency. There's no reason you should get parabolic movement like this when you've got a short against a short. It should be that type of price action. It's not. So it's just very difficult. I'd rather do that because there is a chance that the Swissy will power up based on a safe haven run, in which case that will happen, basically. So we'll see. If something goes wrong with the yen, for example, the Swissy will power up. If anything goes wrong with Gaza, again, the Swissy will power up. If Biden decides he's not going to run, the Swissy will power up. Yeah, so the safe havens there, basically, if anything comes unpredictable in the world, the safe haven is where you put your capital. They have low interest rates. They have stable movement, stable economy, low unemployment. There's no reason anything should go crazy. So you can use it to dump money into and push money out of, which is what actually makes it move. But when you put your money into it, you've got a stable environment to keep it. So that's why I would be more short than long on that one. Euro pound, same thing. This one I don't mind taking in either direction. This is the one that I've got the EA set long and short on. Didn't get an entry on that. Long or short, doesn't matter. That interest rate is coming down. That interest rate is coming down in the next few weeks. Moves 27 pips a day on average. It doesn't move. Yeah, there's absolutely no reason why we want either of these to move erratically because we are close trade partners. We make money out of each other constantly. So big movements like that screw up both economies. We don't want it. So we keep it nice and tight. So good for range-bound trading, but not fast because you don't get enough movement in the day to get out your positions. So, just take any longs or shorts on that one at the moment. I am. Euro yen, same. Don't know about the yen. Euro New Zealand. This one really this week is a lottery. So this week we're either doing that or that, depending on what happens with the news on the interest rates. So no idea. In theory, it's bearish, and it should really be bearish. So either way, the euro have dropped interest rates, making it slightly more bearish. The New Zealanders have indicated they may increase interest rates. At least they're going to freeze interest rates, making it bearish. So shorts at the moment, we've just had a reversal alert and a retest. Beautiful M pattern reversal last week. Market structure's looking perfect. So yeah, looks much more interested for shorts at the moment. So any RSI extensions to the upside, ADR hits to the upside, which you're going to get shortly, although this isn't really an ADR because it's a gap down, but market structure is definitely putting in lower highs. So that would be a perfect spot for the next short. Failing that, you've got a double top opportunity at the propulsion gap and another double top opportunity at that propulsion gap. So if you got in short on an ADR today and it didn't work out, one of those is probably going to be resistance, isn't it? Euro US to the upside. So again, this one, I don't really care which way it's going. At the moment, we've got upside movement on it on a weak US dollar. So when we get some strong US dollar news, it will come down. Yeah, the euro is going to be pushed around by the US dollar. It always is, as you can see. It just goes up and down all the time. You get the odd massive bit of news, and then we do that again. So I don't care which way this goes. I'm trading it long and short. Any extension, so as you can see, I'm short at the moment from that extension. I was short from that one. I was long from that one. I was short from that one. I was long from that one. Short, long, doesn't matter. Just up, down, up, down, up, down. There's no reason why that will change either. It's a beautiful pair to trade. It's the most liquid pair we've got. Yeah. If you wanted to live on a high risk one pair, someone said to you, right, we're scrapping all currencies. You can keep two. It's this, basically, because it's the two biggest currencies on news. So all you get is upward and downward movement and market structure all over the place. So yeah, absolutely perfect, that one. So bear with me 1 second. Just adjusting something. So yeah, so those are your euros. So bearish on those. Pound, I'll do in a sec. Let me just catch up on the chat. Pound CAD, going to do that in a second. When is it clear for you a pair will trend in the next months given the fundamentals? I see you trade only in one direction. Do you also modify the RSI levels? No. Or you don't know when something's going to trend. That's the whole point. That's why trend traders fail all the time. No one makes money trend trading. But banks do. Because you can't time price. You cannot time price movement. It's random. So I have no idea when something's going to trend. But when the main way you would expect a market to start trending is when you have a differential on interest rates, which is why we pay attention to that. Yeah, this is what this is all about. And the scorecard here, the scorecard, directional bias scorecard. So this is basically taking the fundamentals when it loads and showing you what the expected direction will be. So if you have something with a very high interest rate and something with a very low interest rate, the market will want to put money in the place with the high interest rate because it's a carry trade long and they're going to earn more money from it. So therefore they buy that currency against the other one. Yeah. Which is why we're constantly changing interest rates up and down. So the Canadians have just reduced their interest rate. It's lower than the pound. The pound haven't reduced their interest rate. So therefore at the moment, the pound is a buy, pound CAD. Yeah. Because interest rates are in the pound's favor. Interest rate changes in the pound's favor. Inflation is in the pound's favor. Inflation changes in the pound's favor. GDP is, and so is unemployment and unemployment change. The market is positioned in that direction and retail are all going the other way. Buy it. Yeah. So you ask about the pound CAD. At the moment, it's a long term, but market. In the strategy tester, it foolishly enters in aggressive drawdown control a lot of the time and destroys the profits. Well, don't use it then. How many times do you enter an aggressive drawdown control until you give up? Don't know. All these questions you're asking are completely speculative and discretionary. Up to you. I don't teach anything specific to do with aggressive drawdown control. If you want to learn about aggressive drawdown control, go and watch the videos on the website. There's loads of them in here, in this section. Yeah. It's a very, 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 very important part. There's 3 videos, one there, and one there. Watch those 3. You will understand all about aggressive drawdown control. You won't know how to execute it, though, because there is no way to execute it in any way, shape, or form that is regular, because every trade and every position is different. Your P&L is different. Aussie New Zealand dollar, I attempted aggressive drawdown control multiple times and decided to give up at that point. The reason wasn't because of any other reason than it had hurt me. I'd taken a 9% loss and I needed out. Yeah. If I hadn't have done that and I'd taken another aggressive drawdown control that week, at that point, I would have been out of all the positions with a lovely profit. But I didn't, because I got out there. Why? Because it's discretionary. It's my decision. There is no rule that says you must now give up on aggressive drawdown control. And there's no rule that says you must now take aggressive drawdown control. Aggressive drawdown control is a tool to control a trade that is getting out of control and your average price is getting too far away from where you are. So if your average, like me here on the US dollar yen, is well within ADR and there's a 58% chance of achieving it today, I'm not doing anything. If my average price is at 200% of ADR and we've got some news coming up this week that could drive it higher, I will probably want to do an aggressive drawdown control attempt. How many I've done before? Don't know. This is trading. There aren't any rules that will make you money. In the strategy tester, you said it foolishly enters aggressive drawdown controls. Why do you think it's foolish? If it's disagreeing with what you would have done, who's the fool? You are, because you're making the EA do something that you think is foolish. So don't make it do it. Make it do something different. Test it. Yeah, but what's happened in the back test has got nothing to do with this week, because that's never going to happen again. Yeah, back testing shows you past results. You will never get that same price pattern. Look at this chart here. Every single day on this chart is different. Every single day moving forward will be different and will not match any of the days you've had before. So every single trade, signal, and condition you've had in that backtester in the past is never happening again in that order. Simples. Do you know who teaches proper fundamentals on YouTube? No. Universities do. It's called economics. Economics, basically. Universities. Anton Creel is probably your best. But Anton won't teach you for free on YouTube. Anton will show you videos, but if you want to learn fundamentals properly, he'll sell you a course again for 5 to 7 grand. Plus. And then you are going to spend an awful lot of time in spreadsheets figuring out what the long-term fundamentals of a currency should be, and it won't make any difference to your results in the slightest. Because if the fundamentals point long, let's look at the pound CAD again. Great example. Right, the fundamentals say you should be longing the pound CAD, yeah? But Bailey, when he speaks next week, is going to change the fundamentals on this. So if you are in a long position from here and you're adding to it, and obviously fundamentals are 3 to 6 month views, and you're going to hold that position, when Bailey comes out and says we're dropping the interest rates in the first week of August, and this thing collapses down like that, you have to adjust all of your spreadsheets. Not now, on the 1st of August, because the actual figures are what you pay attention to, not what people say. Which is why it doesn't help with your intraday trading. If you're trading any time frame lower than a daily chart, fundamentals will give you a rough bias, but the fundamentals are long. This came down for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, starting to go up again. So 12 days, call it 2.5 weeks, this thing dropped for. But you said it was a long. Yeah, it was a long. But it doesn't go like that. It goes like that on its way. So knowing fundamentals isn't going to help you. If you want to learn fundamentals, go and read this. This tiny little bit of information on my website gives you everything you need to know about fundamentals. If inflation is going up, they will rise interest rates. If interest rates are going up, it's bullish for the currency, and vice versa. If unemployment goes up, it's not good for the currency. Yeah, those are the simple. These are what I call the key fundamentals. These four: interest rate, inflation, GDP, and unemployment. These are the main drivers for movement, direction. But they don't help you for short-term trading. They give it's like the COT. The COT bias is a 3-month view. It's a top-down seagull. I can't draw seagulls. Hello. That's a seagull. It's a top-down view on the market, like from the International Space Station. Yeah. All the people running around down here, you can't even see them. The 5-minute charts, the 15-minute charts, the hourly charts. Doesn't affect them. You can see there's a whacking great storm here heading for there. These guys have got no idea about it. That's interest rate changes. Do you know who yeah, I've answered that one. Are those red and greens on the right an EA or an indicator? These buttons, that's the position trader EA. Oh, that one. No, that's the Price Action Toolkit. Your broadband for me keeps dropping in and out. Virginia, think about what you just said. My broadband cannot drop in and out for you. It will either be dropping in and out for everyone or nobody. Yes, I have got dropped frames this morning. Don't know why. Can't do anything about that. Right, let me just cover the rest of these FX pairs. So the pounds, pound odd. Connection drops, is it? Yeah. It's, I don't know why. Can't do anything about it. So it's just is what it is. Let's do a little speed test. An issue. There's no issue with me up anyway. 370 meg. So I don't know. Afternoon, Pot DJ. Thought it was just me getting the same connection. There is a similar website called Edge Finder, which is good but very expensive. Yeah, there is. I don't know how much it is, but it's the same. It doesn't make any difference though. This is the thing. Like I keep saying, all fundamentals are. All this is a whichever way you want to look at it. It's either a signal indicator or a condition indicator or a trend indicator. There is only 3 indicators. There's 3 trading strategies available. There's 3 indicators available. That's it. Yeah, you can be either a mean reversion trader, a breakout trader, or a trend trader. There's only 3 types of trading. Doesn't matter how many systems or strategies you put together, they conform to one of those 3. There are only 3 indicators. There is a condition indicator, which tells you whether or not a market has moved and is in a condition. There is a trend indicator, which tells you a directional bias. And there is a signal indicator, which tells you when to get into the market. There's only 3 indicators. I don't know how many. I think there's 400,000 indicators out there for MT4 or more. But they all do one of 3 things. They give you a condition, a trend, or a signal. Yeah. The market can only move up or down. It's binary. You have a 50-50 shot every time you press the button. All this does is say the fundamentals point to the pound CAD being along. Right now, today, that's it. Whether it goes up or down over the next 3 weeks, I have no clue. Mike's gone. Now, Mike's gone. Hello. Oh, there's something wrong with the streaming software this morning. By the looks of things, it was just locked up. I couldn't press any buttons. So I don't know what's wrong with it. Something's wrong with it today. But anyway, what I was talking about there, if you didn't hear me, was I don't know what you heard and what you didn't. But basically, I don't know what you heard. But there's 3 conditions and three strategies. That's it. Three indicators rather. You've got condition indicators, signal indicators, and trend indicators. There's 400,000 of them out there, but there is only 3. There's only 3 strategies: mean reversion, trend, and breakout. Doesn't matter how many strategies you learn, they are one of those 3. So, and the market only goes up and goes down. That's it. So there's a 50-50 shot of your trade working. So it doesn't matter what indicators you use, this being one of them. This is a trend indicator. Yeah. This tells you the expected direction based on fundamentals. But in a trend, if you look at a daily trend, it can go up and it can come down for 4 weeks before it goes up again. The trend is correct. But if you're trading that long only, you're stuffed. Doesn't matter, does it? And at the moment, interest rates are all over the place. So do I trade stocks? No. Or invest for long term? And if yes, then what do you think is better, trading or investing? I don't know. They're totally different things, aren't they? Investments are long term. If you want to invest, just go and get a financial advisor. They will invest your money for you. If you want to become a full-time trader and earn your living doing this, become a trader. Trade whatever you like. Stocks are exactly the same. Everything, like if I remove this, right there now, okay. So you are now looking at a chart. You have no idea whether this is a stock, a commodity, a Forex pair, a cryptocurrency. You have no idea whether this is a 5-minute time frame, a tick chart, a daily, a weekly, or a monthly chart. Yeah. This is just a load of candlesticks on a chart showing you a representation of price over time. What is going to happen on the next candlestick that paints is it will either go up or it will go down. There is nothing on the planet that can tell you the direction of that. So if this was a daily chart or a weekly chart, for example, you are looking at an investment chart. And the investment chart is telling you that there is no movement in price. If you're looking at a cryptocurrency chart on a 5-minute time frame, there's no signal there. Yeah, it doesn't matter, does it? What you trade, what time frame you trade, or how you do it, the odds are always the same. It's going to go up or down. You just need a strategy with an edge. And the only way you can prove an edge is to test multiple variations of a strategy. And if they all work, you know it's robust enough to survive. That's it. Which is all I do, is I just find robust strategies and I keep trading them and waiting for the market to fall into the right condition. So investment is, if you want to become an investor, you're going to need somewhere between 50 to million, whatever. If you want to become a full-time trader, you're going to need a pot of capital to start that with. At the end of the day, it doesn't matter how you trade or what you do with it. You've got to have money to start, haven't you? So you choose your direction. Investment strategies will tend to return somewhere about 2 to 5, 2 to 10 maybe % a year. Trading strategies will return anything up to 100% a year, but with high risk, massively high risk. How would you go about trading only one pair? I wouldn't. Can't trade one pair because if it doesn't set up, I can't get paid. Perfect example on the screen. Yeah, pound odd. That is the last 2 weeks. There hasn't been a signal to go long or short. So I've sat here for 2 weeks and not earned any money. Can't do that, can I? You can't trade one pair. The only way you can trade one pair is if you trade a city time frame that has enough movement on it with high risk and low probability, in which case you're not going to make money long term. You can't trade one pair, in my opinion. You can trade one currency. Things like futures, yeah, you could just become an S&P trader and intraday trade the open, like, you know, just like this morning with the DAX, yeah. So far, the DAX this morning's made me $800. Lovely. Beautiful break on the FTSE as well. 5-hour break today. Just about to hit TP2 on the DAX. Look. Go on, hit it while I'm here. That'd be nice. Just going to miss it, isn't it? You watch. You watch. You basically just wait for individual instruments that match the requirement of your strategy to set up, and you trade whatever moves, which is why we have the dashboards. We can monitor all the pairs. We know that ADR has an edge in the fact that when the market moves beyond its average daily range, the chances of it going further are limited. Therefore, the chances of it dropping are higher. That's the edge. Doesn't matter what moves. If something moves, the chances are it will start to fail. Yeah, same with RSI. The RSI strategy monitors all the charts, all the FX pairs. Doesn't matter what moves, does it? If something has moved parabolic for 3 days on the trot and gone above 80 on the RSI, on the 4 hour, like the pound US dollar has, the chances are it's going to pull back. Yeah. I'm in short. We got a parabolic move to the upside. Yeah. It's going to pull back at some point. Doesn't matter which currency gets there. What we're looking for is the market to be stretched. That's the edge. Rubber band theory. That's the edge. Doesn't matter what does it. If you only traded the pound US dollar and it didn't give you a signal for a month, how do you pay your mortgage? The stream's freezing again, is it? Oh, I can't do anything about it this morning, so I'll whiz through the rest of the analysis. You'll either hear it or you won't. I don't know. Yeah, that's using my EA on the DAX. That's the stock index hedge EA. That one. SIH EA. It's working again, is it? I don't know. Right, so I'm going to whiz through these pound pairs. Euro New Zealand. So we've got some movement on the euro today. So they're having a strong move. They like what's going on with the elections, by the looks of things. So pound odd at the moment going absolutely nowhere. No signals on this for a couple of weeks. So we're just basing. At the moment, the bias on this one would be, short against the long. We are going to drop interest rates on the pound. The Aussie possibly raising, but definitely not dropping. So you'd be much more interested in shorts than longs on this one, but that's not happening at the moment. And as you can see, the market's not moving because it doesn't know what to do with it. Pound CAD, I've got shorts on at the moment. So in short on this one, first entry was on that extension, second entry up here on Friday. So just looking for a nice little drop down on that one. Doesn't look like that weekly high is holding very much. A bit difficult to tell on that one because we've had a bit of a gap on the pound as well. But yeah, just shorts on that at the moment. No problem with that. Bias is short against a short because interest rates have already dropped and we're going to drop on the pound. Pound Swiss, not interested. no idea. Bias wise, I mean, the pound is going to start to weaken a little bit. The Swiss already is weakening. So in theory, this will probably become a little bit more range bound, but don't know. I've got 63% drop in my missed frames, apparently. Something wrong. So pound New Zealand shorts at the moment off the RSI extension there at this propulsion move. So this is the high that has been holding. It was holding again last week. We managed to push up against it. We've got a reversal alert. We've put a lower high in and lower lows. So we are in a downward channel, which could become a flag to break up. But again, this one is totally down to that New Zealand dollar this week. It's either going massive bull or massive bear this week. We don't know which. So we'll see what happens with that one. But I'm short on it at the moment. Obviously, if it pushes up, they'll be adding positions in. So my next short is there, which is going to be a break of that high. So we'll scale in up there and wait for a pullback. But that propulsion gap is certainly holding at the moment very nicely. Pound US, trading this one in both directions. I don't have a bias on it. It's the US dollar. It will keep going up and down and up and down and up and down. So I don't really mind which way this one goes. I'm short at the moment, looking for a push back down into propulsion, retesting this area here. That's where we may find the buyers. But if it pushes up, we're looking for a double top bounce at 125 ADR and a push down. But loads and loads and loads and loads of US news this week. So this could go on and wait and see where the market decides to move it. New dollar coming down. Target on this. I need to just set target on this. So propulsion. So target is going to be ADR today if it gets there. So just targeting that propulsion gap to the downside just in case this is turning into a bull run. Obviously, Wednesday, that's changing. That could go absolutely anywhere on Wednesday. We'll see where it goes. New Zealand Swiss, again, no clue. This one's a little bit less spiky than the rest of the Swiss pairs. So this is moving quite nicely at the moment, but I'm still not really interested in trading it. So at the moment, we are just flagging. That New Zealand dollar, I think, is probably going to power up. So I would be looking more for longs than shorts on it. But at the moment, I'm not interested in the Swiss. It's just too unpredictable. Also, this New Zealand dollar is unpredictable as well, if you think about it. The last two interest rate changes we've had, we've gone a parabolic move that way and a parabolic move that way. So we've got another interest rate not change forecast for this Wednesday. If this Wednesday we get the same thing, it could well easily go parabolic again. So New Zealand dollar, very erratic at the moment. So this is probably the most volatile pair you've got going, isn't it? Really, from an unpredictable perspective. So don't know about that one. New Zealand dollar, US dollar, again, got shorts on at the moment. Don't mind being in either direction on this one. So we've got a target on that. That one I got into on Friday. So target propulsion gap to the downside. Looking for a pushback down there. And the US, I've covered US Swiss and US yen. So I haven't covered US Swiss, but US Swiss, again, not trading this one. Again, very, if you get a big news event on the US dollar happening at the same time as the Swiss decide to go on one of its silly runs, this thing's not going to stop. So this is probably the most dangerous thing out there at the moment, apart from the US dollar yen. So at the minute, obviously, we've dropped that interest rate on the Swiss without telling us. We're pulling back at the moment, so that would be the expected move. But it's all to do with news. So if the US gets a load of crap news this week, we're going to be back down at the double bottom. In which case, then it will probably bounce. So I would much rather right now not having heard what Powell is saying tomorrow and Wednesday, be long on this. But tomorrow and Wednesday, Powell could completely change the directional bias of the US dollar. So still got dropped frames for some reason. So US CAD, beautiful. Trading this in any direction possible. I got out of my longs from last week. We're just not really going anywhere at the moment on this one. And we had news last week, which I basically wanted to get out of that one on in case it didn't go the right way. So right now, trade this in any direction. Longs, shorts, longs, shorts, longs, shorts, shorts, shorts. Yeah, just every RSI extension, beautiful. So all looking good at the moment for that one. So trading that in any direction, just waiting for a signal basically to set up now. But obviously bear in mind this one's going to get very volatile this week based on all that US news that we got coming up this week. So there you go. So apologies for the stream quality this morning. I've no idea what's going on, but I am dropping frames. Lots of them, apparently. 25% dropped frames. Using 2% of my CPU. So it's either the streaming software or something else. I don't know. Might be a YouTube issue. I don't know. But anyway. Right, so that's it for this morning. I've got nothing else really to look at. We've looked at everything, so there's nothing else to look at. Full stop. So bear in mind, obviously, there's no news today. You will probably have a nice break at the open in New York because there's no news really to sway that in either direction. Tomorrow afternoon is our first big news event. So I'll be on tomorrow afternoon at 2:30. And we'll obviously have a look at the US Open, see what's going on there. 2:15. Trade the New York Open, trade the US indices. And we'll have a look at basically what is going on with Powell at 3 o'clock. So that is our first news event this week, 3 o'clock. And then obviously we're into the interest rates for New Zealand on Wednesday. So, all right, so have a good day. Anything else you need, let me know. I'll be on Telegram or Discord. Hopefully the stream will be more stable tomorrow. I don't know what's wrong with it, but something is. So yeah, I will see you guys in the next one. Have a good day. My streaming software has frozen completely. I can't even stop the streamlet. I can't even press the end stream button. It's my software. It must be my Streamlabs software. I'm just going to have to force close it. So there won't be any nice end of stream thing today because it's all broken. You can't even hear me because the microphone seems to be frozen.